This is Nightly Business Report with Sue Herrera and Bill Griffin.
Signs of nervousness. Stocks fell today on concerns that trade tensions and trouble in emerging markets could slow the global economy.
Back in style, Macy's trounces expectations and says sales are looking up this year, but that wasn't enough for investors.
Door to door, when drivers don't go to the dealer to fix a deadly defect, Honda takes the dealer to you. Those stories and more tonight on Nightly Business Report for Wednesday, August the 15th.
Good evening, everyone, and welcome. A wild Wednesday on Wall Street. Stocks fell broadly as trade tensions persist and investors grow anxious about a potential slowdown in global growth. Though the major indexes finished well off of their lows, it shows issues that have been simmering in the market for months now have not gone away. The Dow Jones Industrial Average fell 137 points to 25,162. It had been down more than 300 points midday. The Nasdaq was off 96 and the S&P 500 was down 21. Bob Pisani takes a look at the two major issues facing the market.
Stocks posted their biggest one-day drop since late June. What's going on here? Let's call it a double whammy. First, there's concerns that the somewhat minor crisis in Turkey could spread to other countries. Now, at its heart, the issue with Turkey is really about a country with a lot of debt, much of it denominated in dollars, that is keeping interest rates way too low to continue to stoke growth. The second issue is slower global growth in general. Chinese stocks are 20% off the highs they hit earlier this year. It's partly on trade war worries, but it's also due to concerns about a slower economy over there in general. Now, today, investors were spooked pre-open when Chinese tech giant Tencent missed earnings expectations and reported its first net profit decline in over a decade. Wait a minute. Chinese tech companies aren't expected to see profit declines. That doesn't happen. Much of it's due to a regulatory clampdown on the gaming sales. That's 40% of their revenues. Elsewhere, the Chinese internet companies, they all closed lower today. Alibaba had its worst trading day since 2016. So you combine contagion fears with slower growth and then throw in a strong dollar, that's a recipe for a sell-off in commodities and commodity stocks. So oil names today, EOG and Apache, the metals companies like Alcoa, Freeport-McMoran, they were all down 5 to 8%. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
And as Bob mentioned, Turkey's currency crisis and diplomatic tensions with the U.S. continued to influence the market. And in fact, today, it was Turkey's turn to impose heavy tariffs on U.S. goods. Kayla Tausche has those details for us.
Turkey is doubling down on the trade dispute with Washington, its latest salvo doubling tariffs on imports of U.S. products, including cars, alcohol, tobacco, cosmetics, rice, and coal. Turkey says it's responding to a deliberate attack by the U.S., with tariffs on Turkish steel raised to 50% as of Monday. Earlier this week, Turkish President Erdogan said that was an act of economic war. The tensions have caused a steep drop in Turkish currency, the lira, over the last week. White House Press Secretary Sarah Sanders says that's not the fault of the U.S.
Turkey's economic problems, those are part of a long-term trend, something of its own making and not the result of any actions the United States has taken.
President Trump says tariffs work, tweeting, "Our country was built on tariffs, and tariffs are now leading to great new trade deals." Talks are ongoing, but no new trade deals have been ratified, and the U.S. Chamber of Commerce disagrees tariffs will help, especially with Turkey, saying they, quote, threaten both countries' economic interests, and called on the two governments to address their differences through dialogue rather than the unilateral application of tariffs, sanctions, and boycotts. The White House says sanctions may be relaxed if Turkey releases a U.S. pastor on house arrest, but says tariffs on metals won't be rolled back because of national security concerns. For Nightly Business Report, I'm Kayla Tausche in Washington.
Let's turn now to Mark Poulier for more on the markets and what he sees ahead for stocks. He is senior U.S. equity strategist at Bank of America Merrill Lynch. Mark, welcome. It's nice to have you here.
Thanks for having me.
Tell me what your reaction is to not only what has happened today in the market, but the past couple of days. Is this a decisive turning point in the bull market, or do you think it's just kind of a bump in the road?
Sure. I think this is amalgamation of what we've seen for the last several months. If you think back to last year, you had global growth really firing on all cylinders. Every major economy was starting to see a big pickup in growth, and that was reflected in equity markets around the world with very, very powerful returns across the world. This year, the story has been a little bit different. You started seeing some pockets of weakness around the world while U.S. growth has been accelerating. Add on top of that concerns around trade tensions, a stronger dollar. And in my mind, that explains why the U.S. stock market has been continuing to accelerate and has been outperforming other markets around the world this year.
But you have to admit, I mean, there are some signs of wear and tear in our own market. This week, we've had the retailers reporting. Home Depot, a stellar report on Monday. Macy's, a strong report today. Both of those stocks, though, being hit rather hard by Wall Street. And there were some analysts suggesting that maybe that signals there's maybe a peak in a very important part of our economy right now. What do you think?
Sure. Well, what I think is quite interesting is we had stellar results in the first quarter of this year, 23% year-over-year growth. We saw 8% revenue growth. And consensus on Wall Street thought that was going to be the peak of growth, and we're going to see a deceleration from that. What we've seen this quarter so far is we've seen actually an acceleration of growth to 25% on earnings growth. We've seen revenue growth at 10%, so it's not all tax reform. We're seeing top line growth. So that, to me, comes as a big surprise that everyone, consensus thought that we were going to see a deceleration. We've actually seen it come in better. It's been, on average, about 4% better than consensus expectations. And we're also seeing, I think, something that's quite interesting is we haven't seen stocks that have beat on expectations rewarded for a number of quarters, almost 2 years now. And you're starting to see stocks being rewarded again. So I think rolling up your sleeves, doing your homework is starting to pay off again. On top of that, I'd say the management guidance that we've seen so far has been fairly optimistic as well. You're not seeing much concern around trade yet. Guidance has been very healthy, and you've seen an absolute explosion of capital expenditures. Capital expenditures are up 24% year over year, which again, to me, is a sign that corporates are pretty optimistic about the future and willing to spend their money.
Mark, we'll leave it there. Thank you so much for joining us. Mark Pouillet with Bank of America Merrill Lynch. Bill?
Elsewhere, the Treasury Department is increasing economic pressure on North Korea, now adding new sanctions on companies in China and Russia for violating trade restrictions with Pyongyang. And Treasury Secretary Steve Mnuchin said today there will be consequences for violating sanctions until there is full verified denuclearization of North Korea.
The White House is preparing to expand its Buy America rules to include government infrastructure projects. According to CNBC, the new executive order is nearing completion. The added rules would apply to roadways, pipelines, and broadband. But federal agencies have raised concerns about the cost and the legality related to that program.
New reports on the economy today showed that second quarter productivity was the strongest in 3 years. According to the Labor Department, the measure of hourly output per worker rose at a 2.9% annualized rate. Labor costs also increased, pointing to modest wage inflation. A separate report showed manufacturing activity in the New York area remained robust. The August reading rose to a 10-month high, as a matter of fact. And industrial production edged up in July, but those gains were capped by weakness in the mining and utilities sectors.
A separate report showed sentiment among home builders fell to its lowest point in almost a year. According to the National Association of Home Builders, affordability is becoming a bigger concern. Separately, mortgage refinancings dropped to their lowest level since 2000 as interest rates rise. And the Commerce Department says retail sales rose 0.5% in July thanks to strong hiring and low unemployment.
And that brings us to Macy's, which I mentioned earlier, reported strong quarterly across-the-board earnings this morning. The retailer's results topped both earnings and revenue expectations, and it raised its outlook for the year. However, the stock sold off, in part, I guess, because of profit-taking after a big run-up, and in part over concerns about sales growth. Courtney Reagan digs deeper into Macy's results.
Macy's surprised investors with a strong second quarter. The biggest surprise coming from its comparable sales, which were expected to drop, but instead the department store posted a gain, marking 3 straight quarters of growth. The retailer said the rest of the year looks good, which points to the potential for a strong fourth quarter, its most important of the year. But some investors wonder if the strength will continue.
Comparisons get tougher from here. So I think there's a lot of investors who are locking in those gains, worrying about what's going to happen in the third and fourth quarters, when that's really when the retail recovery started a year ago.
Macy CEO Jeff Gannett said both Macy's strategy and a strong economy drove sales, which improved through the quarter. The retailer's online sales logged the 36th straight quarter of double-digit growth. But Gannett said that he was most excited about the progress in the stores, where there were more transactions and subsequent foot traffic. With malls seeing fewer shoppers than in the past, Macy's has been reworking its store strategy, from the way products are displayed to fewer discounts and newer fashion, coupled with a stronger consumer, and it's working to sell more at full price. The department store has been adding outlet areas to some of its stores, called Backstage, which Macy's says is increasing the amount of time spent in the store and the amount of money spent at checkout. Still, Amazon is becoming a bigger competitor, grabbing more and more apparel sales and on track to be the biggest online clothing seller very soon.
The market's appetite for department stores is still not good. They still think that they're at risk from losing a lot of market share to Amazon, and I think that we're going to continue to see that play out.
Macy's has had a good year so far, but that means expectations are getting higher, and the holiday season is just around the corner. For Nightly Business Report, I'm Courtney Reagan.
Time to take a look at some of today's upgrades and downgrades. NVIDIA got a double upgrade from Wells Fargo, lifting its rating to outperform from underperform. The analyst says the new rating reflects the company's long-term position in gaming, data centers, and autonomous vehicles. The price target is $315. NVIDIA reports earnings tomorrow. Nevertheless, the stock fell about 1% to $259.08. Chipotle was upgraded to overweight from equal weight at Morgan Stanley. The analyst says Chipotle's turnaround is working and sees the stock surging 20%. The price target is $600. Shares today closed up 6% to $525.89.
Hasbro was upgraded to buy from neutral at MKM Partners. The analyst there says that investors should anticipate a material recovery in the next 2 years, thanks to the company's toy line expansion. Price target now $115. That stock was up a fraction today to $98.71. Western Digital was downgraded to market perform from outperform at Cowen. The analyst cited competitive pricing in that industry and a cost structure that is not as efficient as those of its rivals. Price target $70. That stock fell more than 1% to $63.95 today.
Prices are on the rise, so what can you do to protect your portfolio from inflation? Some possible answers coming up.
Senator Elizabeth Warren wants to make companies and CEOs more accountable to employees. During an interview on CNBC with Mad Money's Jim Cramer, the senator said that she's introduced legislation which would require corporations with more than $1 billion in annual revenue to obtain a federal charter. That charter would then obligate all directors to consider the interest of all stakeholders.
We have seen over the past 25 years extraction of about $7 trillion of investment in America's companies. That's not how we build a long-term future. So I have a proposal to deal with it. And my proposal says, let's get a little accountability into the system.
And that accountability includes proposals that include putting employees on the board of directors as well.
A cryptocurrency investor has sued AT&T for more than $200 million. Michael Turpin alleges fraud and gross negligence in connection with the theft of digital currency tokens from his personal cell phone account valued at $24 million. In the lawsuit, he said AT&T was his service provider and that the company's employees actively cooperate with hackers. AT&T disputes the allegations.
Meanwhile, the new CEO of Verizon said its digital media unit called Oath is not for sale. During a CNBC interview, Hans Vestberg called Oath an important piece of Verizon's strategy. He also emphasized the top priority of the largest U.S. wireless carrier is building out a faster 5G network.
We are ahead of the game. I mean, Verizon is first in the world. We're actually doing this now commercial launch on their proprietary software on 5G. So the global software on 5G is coming by end of the year, and then you start rolling it out, and then you need devices, chipset for IoT coming out. So you need to be a little bit understanding that it's going to take some time.
Vestberg took over as CEO just on August 1st. Shares of the Dow component rose in today's trading session. Sue?
Bill, fellow Dow component Cisco reported solid quarterly results driven by growth in its cybersecurity business. The network equipment and services company posted earnings that topped estimates, and it issued an upbeat outlook. Cisco earned 70 cents a share. That's a penny better than expectations. Revenue rose nearly 6% to $12.8 billion. Investors like what they saw, sending stock higher in initial after-hours trading. Josh Lipton has the one key takeaway from Cisco's quarter.
Infrastructure platforms revenue in Cisco's latest quarter jumped 7% to $7.44 billion, and that was better than expected. Piper Jaffray's Jim Fish says that number is critical. It refers to Cisco's core business. Networking offerings related to switching and routing. Fish also emphasized the company's product backlog of $6.6 billion, a big acceleration, nearly 40% from last year, he says. For Nightly Business Report, I'm Josh Lipton, San Francisco.
Elsewhere, a major spirits company is betting big on cannabis-infused drinks. That's where we begin tonight's market focus. Constellation Brands is investing $4 billion in Canadian marijuana grower Canopy Growth. It's the biggest wager to date in the burgeoning pot industry, but the company's products will not be introduced here in the U.S. until they are allowed by federal law. Constellation, which owns Corona and other beer and wine brands, has been dealing with a recent decline in beer consumption. Shares fell 6% today to $208.27. Meanwhile, the hedge fund owned by the CEO of Sears is offering to buy the Kenmore appliance brand from the retailer for $400 million. Kenmore is considered one of the cash-strapped department store's last remaining valuable brands, and it's no secret that Sears has struggled for years with shrinking sales and has been forced to sell off other popular brands just to raise cash. The stock, which is now a small cap, fell 13% today to $1.59. And it was a disappointing quarter for Performance Food Group, which missed earnings and revenue expectations and provided a downbeat outlook. The food distribution company blamed rising labor and fuel costs, and executives say they do not expect those fuel expenses to go down anytime soon. Shares dropped more than 10% today to $33.60.
Warren Buffett loaded up on shares of Apple and Goldman Sachs in the second quarter. According to regulatory filings released late yesterday, Buffett's Berkshire Hathaway added more than 12 million shares of the iPhone maker, making Berkshire Apple's second biggest shareholder. It added more than 2 million shares of Goldman Sachs to its holdings. The positions are as of the end of June. The stocks moved in opposite directions. Shares of Apple rose today to $210.24. Goldman fell to $229.25. The SEC has reportedly served Tesla with a subpoena just days after CEO Elon Musk tweeted that he was considering taking the company private and that financing was secured. The subpoena was first reported by the New York Times. Shares dropped 2.5% to $338.69. Well, Kleenex and Huggies are about to get more expensive. Kimberly-Clark is raising prices across most of its products to combat higher commodity costs. Pulp costs have risen 60% since late 2016. That's according to one estimate. Consumers will start to see the higher prices in the fourth quarter of this year and the first quarter of next. Shares popped nearly 5% to $116.46.
And that move by Kimberly-Clark follows price increases by other consumer products companies like Procter & Gamble, also due to rising commodity costs. And those cost concerns, according to economists, are intensifying because of the ongoing trade tensions with Canada and with China. So if rising prices continue to be a part of a bigger trend, how do you inflation protect your portfolios? Joining us with some ideas tonight, Ken Mahoney, the president of Mahoney Asset Management. Good to see you again. Welcome
Good to see you
back.
again, Bill and Sue.
Obviously, as inflation goes up, rates go up, and that's bad for bond holdings, but you advocate floating rate funds. Tell us about one that you like.
Yeah, there's different floating rate funds. So the American Beacon floating rate fund, it doesn't lock in like the other bond funds, so it keeps adjusting its rates. The portfolio manager happens to keep shorter maturities and kind of keeps up with that. So you don't have this, basically getting 3% and losing 4 or 5% in net asset value. We've seen in the last few years, according to Morningstar, that's one of the best floating rate funds there are out there.
They have a decent income?
Yeah, it's almost about 5% dividend. But the biggest thing is some protection against rising rates. In fact, if inflation's increasing, commodity prices, we just heard Procter & Gamble, passing on to their prices. And again, a company that will be higher rates. If we have higher rates for bondholders that are looking for income, they really have to start looking at some floating rates in their portfolios.
You also say some of the big banks you might want to look at.
Yeah.
And you point out J.P. Morgan. But, as interest rates go up, the banks make more money. So.
Yeah, the spreads are there. Jamie Dimon, the CEO of the concerned J.P. Morgan, definitely gets it. Their dividend's about 2%. They have a lot more. They can actually raise a dividend between the earnings per share and with the dividends pay out. But Jamie Dimon, the CEO of J.P. Morgan, if you're going to invest in a bank, invest where the best management is. And to me, that'd be J.P. Morgan.
Healthcare is a classic defensive play.
Yes.
in most cases. And you pick United Healthcare in that category.
Yeah, I think it's an all-weather type of stock. So whether we go into recession, which I hope is not on the cards, or we ramp up this inflation type of process, that's kind of a fund also, a stock that pays about 2% dividend, also has great management, and they also could hint, raise their dividend based on their earnings per share versus what they're paying out to shareholders.
That sector, though, I mean, night after night, we seem to be doing stories about how healthcare is changing, whether you're talking about the pharmacy benefit managers or the insurance companies. You're not worried about investing in that particular sector right now, or is United Healthcare unique?
I think it's somewhat unique. If you look at the earnings report for the second quarter, which ended June 30th, they had a great quarter, and they guided higher. So the companies like J.P. Morgan I just mentioned and any other type of companies see what they just reported and what they're saying for the guidance going forward, and both of them are very positive.
Ken Mahoney of Mahoney Asset Management. Always good to see you. Thanks again for joining us tonight. Coming up, Honda's new pit crew.
Why are automakers like Honda going door to door to fix recalled vehicles? I'm Phil LeBeau in Miami. I'll have that story coming up on Nightly Business Report.
And here's a look at what to watch for tomorrow. Dow component Walmart reports its earnings. Investors will find out if the retailer's hefty e-commerce investments are paying off. JCPenney and Nordstrom also report their quarterly results, and housing starts are out. It is a key report because home construction has not been increasing as much as the market needs. That's what to watch for on Thursday.
Uber is still a long way from turning a profit, even as its quarterly loss narrows. The ride-hailing company lost about $890 million in the second quarter, but revenue rose more quickly than gross bookings as the company pulled back on promotions. Uber has plans to go public next year, and it's had to deal with corporate scandals, and it faces pushback from cities like New York.
Believe it or not, it's been almost a decade since the first recall for potentially deadly airbags was issued. And today, millions of those vehicles remain on the road. That has the federal government warning owners of countless models to check if they're driving a recalled car that has not been fixed. But one automaker is doing something different. It's going door to door, hunting for those owners in order to replace those faulty parts. Phil LeBeau is in Miami tonight.
Olitas Garcia is one of the lucky ones. Honda, going door to door in Miami, found her 2003 Civic had a defective and potentially deadly airbag.
I wasn't aware the vehicle had a recall on it. I only purchased the vehicle a year ago, and when it was sold to me, I wasn't aware that it had any kind of recall on it. I came later to find out when the young lady from the canvassing team knocked on my door and notified me that the actual car had an open recall.
She's not alone. Millions are unaware their car is under recall, despite high-profile stories of drivers being killed by exploding airbags that shoot out shards of metal, and nearly every major automaker recalling and fixing millions of vehicles. Chrysler, Honda, Ford, Toyota, and other automakers still have millions more that need new airbags. So some, like Honda, are scanning license plates around the country to see if the vehicle has been recalled and repaired.
These are extraordinary measures, and these are extraordinary measures done by companies that are desperate because they know that they've let this drop for many years. This problem should have been resolved more than a decade ago.
We did recalls as we got information from them indicating that we needed to, so I think we acted appropriately, but certainly in hindsight, we wish we had known more. We wish we had had more actionable information at the time to act earlier.
Why are scores of vehicles still on the road despite several recall notices? Well, part of the problem is that many of these vehicles have been sold numerous times. So automakers often lack up-to-date information on the vehicle's exact location. And other times, owners ignore a recall notice they get in the mail.
It sounds that simple, but it really isn't, because especially when you get a lot of, I wish you could see my mailbox, you get a lot of junk mail tossed in there. So it's easy to kind of ignore one of those big flashy cards that looks like it's junk mail.
After a quick check by Honda, Eric Luttrell's 2004 Civic is clear. Good news, but scores of other vehicles with potentially deadly airbags remain on the road. Phil LeBeau, Nightly Business Report, Miami, Florida.
Finally tonight, the highest paying jobs in America. Glassdoor, that's a job and recruiting website, has analyzed salary reports submitted by employees and median base salaries from across the country. Most of the highest paid jobs are in the healthcare industry right now. Physicians top the list with a median base salary of $195,000. Coming in number 2, pharmacy managers at $146,000, and rounding out the top 3, pharmacists with a median base salary of $127,000.
Before we go, here's a look at the final numbers for Wall Street. The Dow fell 137 points, but it had been down more than 300 about midday. The Nasdaq was off 96 and the S&P 500 was down 21. And that will do it for us tonight on Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith. Have a great evening. We'll see you tomorrow.